And welcome, it's Mary Ellen McGonagle here with your weekly Edge show for September 22nd. First up, as always, we're going to take a look at the broader market, see where did we close for the week. I'm going to highlight some key areas of support. And also, we'll take a look behind the broader markets at the sector activity that's taking place, a bit more by way of rotation, and beyond into some of these sub-industry groupings. Overall, a very weak period for the markets. We'll get into that. And then also I'll share with you some of the headline news, certainly very impactful last week on Wednesday, that drove price action. And then last up is viewer question of the week. And that question is all about how can you tell that the downtrend in the market, as well as select stocks that I'll be sharing with you, have in fact reversed into a new uptrend. So here we are with some of the news from last week, and certainly the most impactful was Wednesday's notes from Fed Chair Powell from the Federal Reserve's FOMC meeting. They did keep interest rates steady. That was as anticipated, but Powell's talk that interest rates may need to remain elevated for some time really caught investors off guard. We did see interest rates rise. I'll share a view of that with you. And then in turn, the broader markets exhibit quite a bit by way of weakness last week. We also did get some housing data. Housing starts dropped 18% in August, and then builder confidence also fell to a 5-month low, both due to mortgage rates climbing above that 8% level. And then as the week progressed, particularly on Friday, there were several Federal Reserve governors that spoke at public events, and two of those were commenting that they anticipate more rate hikes being possible, which again, in turn, provided ammunition for the markets to pull back. And next week, we do have some very important inflation data to be released. That's the core personal consumption expenditures, PCE data on Friday. This is the most closely watched gauge of inflation by the Federal Reserve. And if we do see any kind of uptick, that would, of course, give more reason for the markets to pull back further. Consumer sentiment, durable goods orders, and Q2 GDP numbers will be released next week. That's going to be a revision on that GDP data. So that's other news that could sway the markets as we move toward the fourth quarter. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. A couple of items of note is the fact that we are moving very close to this key area of support in the markets at that 4,300 level. If we break below that, it could be psychologically damaging by way of making room for further downside. So we're going to be closely keeping an eye on that. And then also you can see these momentum indicators continuing to trend downward. This is the RSI below 50 and stochastics also below 50 and trending lower as well. So if we go ahead from here, I do have another view of the S&P 500 that shows you a case that took place on Thursday, and that is a head with shoulders negative formation, where you have the index hit a near-term high, pull back, hit a new high, pull back again, and then here's that second shoulder. What you're on the lookout for is a potential break below the lows, and we did get that on Thursday. So generally negative price action in addition to weakness elsewhere, which I'll share as we move forward. Let's go ahead and take a look at those 11 sectors within the S&P 500, and we're looking at a 2-month price chart. It's a daily chart. I've sorted the listing by relative strength, and you can see up here at the forefront, energy remains relatively strong, although it did pull back this week. It's up here at the forefront. Also, the momentum is beginning to drift lower, but still overall quite positive for energy. Now, we also have utilities here at the forefront. Not the best looking chart. It was down less than the broader markets, which were down about 3%, and utilities down about 2.5%. not a great looking chart, but here it sits up here at the forefront. Of course, you do want to be aware of some of these other really leading heavyweight areas, and up here is technology. And we can see that technology is continuing to drift lower. That MACD now in negative territory. This is XLK. We're going to keep an eye on this mid-August low. And if we break below that, it would be quite negative for the technology sector. Also down here in the weaker quartile, one area I did want to share with you is the sharp sell-off in consumer discretionary stocks. This is XLY, and you can see how poorly it was the worst performing area last week. A lot of that having to do with Tesla down almost 10%, Amazon down 8%, both heavyweight names, but there certainly are other retail areas that are generally quite weak as recession fears are beginning to bubble up again. So also, I do want to share with you some of these more defensive areas that relatively outperformed, but overall are in a very confirmed downtrend. This is XLP, the consumer staples sector, and you can see that it is finding upside resistance at these moving averages. From here, we're going to move through and take a look at some sub-industry groups that are also very helpful as far as keeping you abreast of what is shaping up relative to strength or weakness. And again, RSI in descending order, sorted by strength with these ETFs. And first up here is a continued rise in the US dollar, but which generally is a negative for the broader markets, but a very confirmed uptrend taking shape there. And then Brent crude oil prices continuing to remain elevated, up at $92 per barrel. It's really not translating, certainly this week, into overall energy stocks, but certainly that increase in the price of oil is one item that Powell mentioned on Wednesday, in the sense that higher oil prices in turn are keeping gasoline prices high, which will in turn keep inflation elevated. So also I did want to share with you a view of that yield on the 10-year and take a look at that gap up that took place on Thursday. The 10-year yield is now at 4.4%. As cited in the past, generally anything above 4% is going to be negative for the markets, and particularly for growth stocks. So two areas that pointing out as being negative backdrops for the broader markets. And up here, we're taking a look at volatility, the VIX or fear index, and you can see this sharp spike that took place. It's at about 17. Generally, a level above 16 is going to be negative for the markets. So you can see that all is not quite well with this backdrop that we're seeing in some of these areas. Let's take a look at these growth areas in technology. This is software, IGV, down about 3% on the week. This week it did close below that 50-day simple moving average, with that MACD now in negative territory. We're going to keep an eye on this list because there were a number of stocks in the software space that came out with some really good earnings reports. This low here, again, in that mid to late August period, is going to be very closely watched to see if we can find support there. And then moving through, one area that was down quite a bit last week was small cap stocks. IWM is the Russell 2000. It's now broken below this 200-day simple moving average. Pretty hefty volume here on this pullback. Not good, certainly as it relates to traders and investors' outlook for the economy if we see small caps faltering to such an extent. From here, I did mention that I would share with you some names that, by way of taking a look at what to be on the lookout for a potential downtrend reversal. So first up, we're going to take a look at Netflix. The stock has been in a very confirmed downtrend. So a couple of other items to point out here. If you have stocks this week or this past week that have exhibited a characteristic such as Netflix earlier this month, where it broke below each of these moving averages, 10, 21, and 50-day, and it did so on very heavy volume. That's an indication of distribution, continued selling on heavy volume, and we can see the stock is continuing in this downtrend. Simultaneous with this break, we did see that RSI get into negative territory and a negative MACD crossover, which in turn foretold further weakness. Now, what I do want to share with you is what to be on the lookout to tell you that in this case, Netflix downtrend has in fact reversed. Well, first up, you will want to at the very least see a leveling off of the stock's price. Let's take a look at precedents here so that you can know what for Netflix as well as any other names out there, what to be on the lookout for. And we can use this example from February into March, this pullback here, and as cited, you can see that at the very least, the downtrend, the stock started trending upward and then sideways. Of course, that's going to be your first step. Now, from there, you will be on the lookout for the stock to break above, in this case, the 10 and 21-day moving average. Take a look at that nice high volume as it broke above what had been resistance. And then simultaneously, we have that RSI enter into positive territory, likewise with that MACD. Now, this MACD black line up through the red crossover was a nice early signal that at the very least that downtrend had ended. But in order to get a positive signal that there is further upside, you will want to see the stock move above its simple moving averages. Now, we did have this Netflix pullback again. This is in line with a broader market pullback, and we can simply use those same metrics again once the markets turn positive, that Netflix had reversed its downtrend with a move above these moving averages and the momentum shift into positive territory. One other example that we can take a look at here as a way to stay on top of names and be on the lookout for at some point a downtrend reversal. This is Intuitive Surgical. I've talked about this stock in the past here because in the past, it has been a very nice winner for subscribers to my MEM Edge report, but you can see this sharp pullback that has taken place. Now, again, I'm going to highlight what you need to see to indicate that the downtrend has been reversed, but let's take a look at why this key 50-day moving average needs to be broken to the upside to confirm a near-term uptrend. Quite simply, when this red 50-day simple moving average begins to trend downward, it will act as upside resistance, and the stock will most likely continue to trade lower. And that's what we saw here in this late August, early September downtrend reversal attempt, where we had these positive shift in the momentum and a reversal on that MACD. But take a look, that MACD never got into positive territory, and most important, it was unable to break above that key 50-day simple moving average. Instead, let's go ahead back to this downtrend in ISRG that was reversed in late March, and we'll take a look at the difference when this downtrend reversal took hold. And first up is a move above the 10, 21, and 50-day simple moving average. Nice high volume on that move above those moving averages. RSI up above 50, trending upward. And take a look, MACD is up here in positive territory, confirming this nice lengthy uptrend. And now we're going to go ahead and take a look at the broader market indices. This is the S&P 500, a daily price chart. And here I do want to highlight some of those characteristics that signal a downtrend or a pullback reversal. So I'm taking us back to the end of March. A couple of characteristics, and you'll recognize this from our view at some of these stocks today. First up again will be a move of the broader market indices, at the very least back above these shorter term 10 and 21-day simple moving averages. A move back above that 50 would be the most decisive move relative to these moving averages. And then also in line with that, the RSI does get into positive territory. And then likewise with that MACD moving above that net neutral, and we can see that this downtrend has in fact reversed. Now, as we move forward, we can see that in late August, we did in fact get those signals where this downtrend was reversed. The index broke above these key moving averages. The momentum on that RSI and MACD did in fact turn positive, and we did have on this daily chart about a 5-day rally and then stalling, which unfortunately turned into a more negative current outlook. So the other key factor that you will want to pay attention to, in addition to the chart of the S&P or the NASDAQ, you will also want to make sure you're on top of interest rates. And if we continue to see rates rise, it will stall the ability of this reversal to continue higher. That's it for this week, everyone. Hope you have a fantastic weekend. I'll look for you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.